Okay, now you can hear me. So welcome to our Friday at noon. And now we have another topic here, and this is going to be bridge loans. And I got Bjorn Bernovic from New American Funding. We're going to go over some of the benefits of having a bridge loan, especially as we get into the spring market. And so, what? No further ado, welcome, Bjorn.
Hey, thanks, Cedric. Thanks for having me.
And so, Mr. Bjorn, if you can give the audience a little bit of a background for yourself and just explaining how long you've been in the business, what type of programs that you do, et cetera, et cetera.
Yeah. So I've been in the business for over 25 years now. It's crazy. And my current company, who I've been with for 7 years, New American Funding, we're a mortgage lender. So we're not a bank. We keep all our loans. All we do is mortgages. So we always make sure we do a great job. Gives us a great amount of different products we can offer because it's our only focus is helping people achieve home ownership and save money. So basically, got every loan product plus a few that we'll talk about today that you might not find with banks or other people that offer mortgages.
Absolutely. And so, being with New American Funding, obviously that's a fairly decent sized lender. And today we want to go over the topic of the day is bridge loans.
Yeah.
And so, I guess to give a little bit of background on what a bridge loan is, I'm gonna let not Alex, but Bjorn go and dive deeper. Bridge loan is basically taking a, something that you can be able to buy another house while you still have your current. And so I'm gonna let Bjorn talk more about that in detail on how that can be achieved.
Yeah. So I guess that to get your idea of what a bridge loan can do, it's normally going to help with a scenario when you're going to go buy a house before you sell your current house. So that's where the word bridge loans comes in. So the word bridge, we're bridging a gap between the two transactions from when you buy and then when you sell your house. And what we're doing is you're taking out potentially a small loan on your current house to get you your equity before you sell your property. And that way you have your equity for your down payment on the new house. So, if you owe, 300,000 on a $500,000 house, obviously when you sell your house, you might have, 150, $200,000 of equity there that you're going to be using for the down payment. Well, you won't have that if you haven't sold your house, but with the bridge loan, you can get that money before selling your house, have your down payment for that purchase. And there's a couple types of bridge loans um, that I'll go through, and the first one is kind of more of a traditional bridge loan. It just does exactly that. You can get a certain amount of money. You can do, a small amount, a large amount. Just it's going to get you some of your equity out. It doesn't touch your first mortgage. So if you have a first mortgage, it's going to stay there, and then you're going to end up having two loans on that house until you sell. And obviously, you're going to pay off that bridge loan and your first mortgage when you sell your property. So that's kind of your traditional bridge loan. Um, what's been around for a long time is along those lines. When you're doing the traditional bridge loan, you will need to qualify and be able to afford all three mortgages. So that would be your current first mortgage, the bridge loan payment, and then your new house mortgage. So you have to be able to qualify for all those three with a traditional bridge loan. So you have to be ready for the double payments, and you have to be able to qualify for those double payments or triple payments in this case. So that is kind of your traditional bridge loan. We have our own bridge loan that we have been offering that kind of fills some gaps that maybe that other one doesn't. So um, we have a bridge loan where we'll actually get you your equity just like the other bridge loan, but we'll also pay off your current first mortgage. So under that scenario, you're only going to have the bridge loan and then your mortgage on the next house. And this can help you qualify for both properties because we're not going to charge you monthly payments on the bridge loan. So you're going to have your current house, you're going to have the loan on the property, the new loan, the bridge loan, but it's not going to have any monthly payments. And because of that, it'll be easier to qualify for your next purchase because you're not having to use your current house's payment under your debt to income ratio. So we're able to get you the money, get rid of your monthly payment, and qualify you for the next house, basically with the notion that your house will be paid off once you get it listed and get it sold.
I had a question there. Well, just kind of jotting down a few things.
Yeah.
You said a lot. You said a lot in that little bit of time. So, for what I'm understanding, it's a few types of bridge loans that you can or that you can get.
Yep.
And so, if a potential seller that wants to buy and then sell later, um, the program that y'all guys offer doesn't have, or I guess you're not including the cost of the bridge loan. You're just only including uh, the cost of the first or the mortgage that they currently have and the new mortgage that they're getting. Is that correct?
So are you talking our bridge loan, like the second
Yep.
type of bridge loan? Yep.
Right.
Nope. So we're paying off that first mortgage. So you got your
Oh,
current house that you're going to end up selling. Let's say you got a $300,000 mortgage. We're going to pay that off with the bridge loan and get you your equity for your down payment. So let's just say your new loan might be, you say you get $100,000 of equity for your down payment. We pay off the bridge loan of 300. You're going to have one bridge loan for 400,000 on your current house, and that's going to be your only loan. And we're not going to charge you monthly payments on that to help you qualify and help you afford the other property, while during that period where you might end up owning both.
so okay. So that's another question. So if so, you're only going to qualify for the new house, not for both the new house and the bridge loan that you just took out that y'all paying for.
Right, because there's no payment there. So
Right.
there's nothing to, yep.
Okay, so I just want to make sure I hear that correct. So the traditional bridge loans would basically charge them. You have to qualify for all three loans,
Correct.
and so the one that you're saying is, we're disqualifying you on the new house versus having to be afford three loans in one.
Yep. And not only do you qualify, but like if the traditional bridge loan, when you have all three payments you got to be making, which can be hard, it can be a hardship as you're moving and incurring expenses and things like that. Where it's called NAF bridge, so New American Funding, NAF bridge, it keeps the affordability, keeps your cash flow a little bit more manageable because you only have the new mortgage payment going.
Right, which that it seemed like that would be a lot more easier to obtain, because most people, if they're trying to buy a bigger home, they probably could be buying at the max,
Yep. Yep.
and so if they need a bigger house, most often that they probably are using everything that they got just to get to the second house, and if they have to then be accounted for the previous house and and the bridge loan, that might wipe them out.
Yep. Exactly.
hmm and so you know the people that probably, I think you said something before about like being able to do this program and have, if you have a couple, 100,000 or more in equity. I'm assuming that that's probably the targeted folks, that at least, I'm assuming that you want to at least have 50,000 or more in equity in your house to be able to make
Yep.
something like this work.
Yep. Well, I'll say that again. How much?
So what I was saying was, do you need to at least have at least $50,000 in equity in your property to make something like this work?
Yeah. So for our specific bridge loan, NAF bridge, we want to be able to, you need to have enough room to get 50,000 out. Otherwise we won't do the loan. For the other traditional bridge loans, I mean, I've done them as little as $15,000 before. So it just depends on your situation. Anytime we're talking to anybody, we'll go through all of their options and just kind of see what works.
Got you. And
But there
so,
is, like, with both bridge loans, you can't get like every penny of your equity because we want to protect the homeowner. So say your house is worth, 400,000. We can't take out all 400,000 because obviously when you sell, you're going to have some fees associated with there. And we never really know what your exact sales price is going to be. So we don't want to put any of homeowners in a spot where they get their house under contract and all of a sudden they got to write a check to get rid of it because, we took out too big of a loan on the property. It's easier
Right.
to correct that with them getting more money and then applying that later.
So I'm thinking that, and you can correct me if I'm wrong, that most people that will really benefit something of this nature is probably somebody who has owned their home more than 5 years.
Yeah, I would think that's a fair. Yeah, that's definitely a right on. There might be some people that maybe have owned it less, but maybe they had a big down payment. If you've owned your house for
Right.
2 3 years and you put down 3% when you bought it, like you may not have the equity that's gonna allow for the bridge loan. You'll probably still have the equity where you can sell and get your money out for the next property, but it might be hard to get it in advance with a bridge loan if you put minimum down and you've owned it for a shorter period of time. Yep.
Right, absolutely. And so I know you were speaking a little bit towards the bridge loan product. Anything else you had to add? Because I feel like for sellers that I guess that are looking to buy their next property, move themselves out of their current home. A lot of times when you have kids or a lot of things going on, this would be a way easier path to get to your next house because it kind of takes all the pressure away. You don't have to be there during the showings. I think that's crucial for a lot of people, so they can just move into their next house. The house can either be staged or it can be empty, and now you can enjoy yourself while we, get the house sold. And once we get the house sold, that'd be completion of the bridge loan.
Yeah, exactly. That's a huge perk. Another perk I feel like is the market can be so competitive on buying a property these days. So like there's a lot of uncertainty when if you're gonna buy and sell on where you're gonna move to, what house you're gonna get. Well, these programs allow you to secure that first, and then you kind of are working towards the end goal of you're buying that property. Now it's time to strategize and get your house listed, whether it be while you have that house under contract and haven't moved out yet, or maybe you're going to list right after you move out so you don't have to deal with showings. But just getting kind of that final end goal in the horizon of like, okay, here's where I'm moving. Here's the date I'm moving. Now I can formulate the rest of my plan rather than traditional, like, okay, I'm listing my house today. All of a sudden I get an offer tomorrow and I got to figure out where I'm going to move if I accept this offer. What am I doing here? When you can secure that last one without a big contingency, that's another nice thing. You're not being a contingent buyer. Sellers don't love to get an offer with a contingent buyer, especially in a competitive marketplace. Like, you're probably not going to get that house if you're contingent on the sale of yours today. You might be able to find a house that I'll work with, but it's going to be hard. And you can just go secure that house and then kind of work backwards for a better term of the traditional sense. And there's a ton of people doing these. I almost think in a few years, like, it's going to be the norm where people are buying their house before they sell theirs, just because it is. While it can be, there's definitely some stress and some nervousness that can come with it, but it is a lot of times a better way of doing things because you just kind of where you're going, type of thing.
Right. And so another question I have for you, this I just thought this. Let's say now I'm not sure if this can be for you too, but let's say if somebody was either relocating to the Twin Cities or relocating away from the Twin Cities, would you still be able to do a bridge loan doing a situation like that?
Yeah. So basically, I mean, for us, we offer our bridge loan in all 50 states. We can lend in all
Okay.
50 states. So it doesn't matter if you're selling in Minnesota and buying in Colorado or vice versa or whatever state. Like, we can set up your financing um, regardless of which states the properties are going to be in.
I feel like that's huge. I mean, you
Yeah,
know,
so
and
relocating would
I
be,
mean,
if you're relocating and you're trying to figure out, the last thing you want to do is sell your house and then maybe have interim housing at the next, location, whether that be a extended stay hotel or, that's going to be expensive and, moving twice and, who knows where you're putting all your stuff. But yeah, for sure, this is a great relocation option.
Yeah, I mean, I guess I didn't think of it that way because I mean, you got to put your stuff in the storage. I mean, if you think about all of those extra costs, but if you just did a product like this where you can just put your house on hold and then go find the house that you're looking for, now you can just make the one-time move to the new house. You don't have to worry about like having your stuff in storage forever. And that's also dependent if you really know where you want to live too. So it's another
Yep.
caveat. And so Bjorn, I know that the bridge loan is a great product, and I feel like more and more people, especially with the spring market approaching, should be obviously looking to take advantage of that if they're looking to sell their home and buy a new one. Can you talk about some of the other programs you have? I know you have a NAV cash program that's specialized for New American Funding.
Yeah. So this is actually my favorite product that we have that you're not going to find anywhere else. So it's our NAF cash program, which is a cash buyer program. So basically, we're going to turn anybody that qualifies, and if you qualify for VA or conventional financing, you can do this program. And what we're going to do is we're going to buy the property on their behalf cash. So probably the most the most likely scenario where this fits in is the same thing. If you got a house to sell and you want to buy a house, well, what we can do, if you don't qualify for all that as a non-contingent buyer, and even if you do, we'll go buy a house cash that you choose for you. You're able to dictate the price. You're able to dictate the closing date. You're able to dictate the inspection items. So everything is up to you, but we're actually going to buy the property and we're going to pay cash. Sellers are going to love it because they're going to get a cash, no financing strings attached offer to it. I saw a stat. This was, a few months ago, that almost a third of all real estate transactions are cash right now. So, when you're
Wow.
trying to compete with a financed offer or a contingent offer and you get a cash offer to compete with, a lot of times you're just blown out of the water. You don't have a chance. So we're going in cash, which is going to help your negotiating power because it's a cash transaction, no financing attached. And once we secure that property, we will then let you move in. So after the closing, you can move into the property that we technically own and paid cash for. And then once you sell your house, then you can finalize your financing to purchase the house from us. So you're going to get your normal loan product. There's no markup on interest rate. It's the same thing as if you're buying it traditionally. But like I said, we're helping out. Like if you're contingent on the sale of your house, we can make a cash offer on your behalf that's not contingent on the sale of your house, which is a game changer if you're trying to move and overcome that hurdle. Like I said, the sellers are going to see a cash offer. They're going to love it. You get to move in, you can stage your house, get out of there, not deal with showings. Like I said, and the other thing I love about this is it gives the homeowners a chance to kind of hit a home run on both transactions. So you'll see other like cash offer programs where somebody might buy your current house cash. They're obviously asking, they're paying 30% off, is what their offer or whatever that number is. It's not going to be full price, but we're buying the house you're going to move into cash. So what that allows us to do is we can be aggressive as we want on that offer. So, what the market dictates is what we can do. So if it's listed at 500 and there's some negotiation in there, we can go in a little light cash. Sellers are going to love it. And like I said, you dictate the price. And then when it's time to list your house, we don't have anything to do with the house. You're going to be working with Cedric, selling your house, trying to maximize the amount you can get for it. So we're not coming in making you take a haircut on selling your house just so it happens quickly, or we're not buying it, your house cash at a discount so we can turn a profit on it later. You're able to be as aggressive as you want when you're buying your house and as aggressive as you want when you're selling your house, and maximize your dollars on both transactions, and take the time to do it properly. Like there's no fire sale on selling. So it's a great product. I have clients that are using this even though they don't have a house to sell. They just want to have a stronger offer when they're in multiple offers. So we're doing cash and they don't even have a house to sell. And we'll go in, pay cash, and then a few days later they buy it back from us and they're all set. So it's a great product. I try to get all my clients at least approved to do it in case the situation arises, because you just never know when that perfect house is going to come up and there's
Right.
5, 6 offers stacking up, and like we need to be better than 5% down financed offer to get this house. Well, let's go cash and make the sellers really like your offer.
Right. And so this, just out of curiosity, so how long does it take? So we just talked about two programs, and I think we didn't talk about the length of time that it would like that's allowed to be able to get the home. So let's say for the bridge loan, if we do the bridge loan, they buy the new house. How long will they have to sell the previous house?
Yeah, our kind of our rule of thumb is, we want, if we're doing the bridge loan, we want that house listed really close to the closing date of when you're buying your next house. And then the
Hmm.
market's just going to dictate that. So it's for the most part, and that's our NAF bridge. It's a good product if you're planning on listing your house like right away. Like, so if you're going to want to buy this house and list your house from, you know, 6 months down the road, we got other programs that we'll probably look at. We go no payments on our bridge loan for 12 months. So if for some
Okay.
reason nothing's happened after 12 months, in this market, we probably got a few other problems we got to address if the property hasn't been sold. But that's kind of what the rope is for there. Um, and then our NAF cash, we want it listed within 2 weeks of the closing. Um, and ideally, everything would be settled within 6 months. The last thing we want to do, I mean, we need you to sell your house so you can complete the transaction. And the last thing we want to do is own the house and have to put it on the market and sell it ourselves. So there's some rope there that we work with people. It's the nice part is they're both our internal programs. So the flexibility is king on these things. Like, every situation's different. There's no hard timelines that are strictly enforced. We have guidelines we're going to want you to kind of hit on the milestones and the timing, but it's going to come up to you too. Like, if you got some repairs to do on your house and you want to do them when you get them out, we're going to want them done right away type thing. But you don't have to like force feed the repairs and tear up your house while you're trying to live there, or move out.
Right.
You can take a breath.
And I think that that's key right now because with all the anxiety when it comes to selling or even buying in this case, because I think the bridge loan, or I'm sorry, not the bridge loan, but the NAV cash is for either if you're selling a house to get to another house, or if you're just buying your first house or second house or whatever the case is. You don't have to have a house to have the NAV cash program. I feel like those
Yep.
are both two key programs, and to take a lot of the stress away. Now, obviously, it's a cost to that. Can you speak to the cost? Is it something that is very minimal, or is it something that we need to be taking account of?
Yeah, I mean, and we call it like our NAF cash, our convenience fee is about 2% of the sales price. So if we buy a house 600,000, you're going to buy it back from us for about 612, which we can finance in there.
Okay.
So we call it our convenience fee because this program is very convenient. We feel like this fee is fair. We don't make money on our NAF cash program. Our end goal is to get our homeowners into their houses and have their mortgage closed and serviced by us. So when we're buying the house, we're paying closing costs. When we sell the house, we're paying deed tax. You're not being charged for those. We're eating that with the 2%. So it can sound like a lot to some people. Other people think it's a great deal because you're probably making that up on negotiations by being a cash offer. That's never a number we're going to know exactly of how much less you're getting the property for because your offer is so strong being cash.
Right.
But we think that makes it up. Our bridge loan is the same thing, 2%. Almost every bridge loan comes with about 1%, not comes about almost every bridge loan, or all bridge loans comes with a 1% fee. And the reason why there's a fee on the bridge loans is because it's a short-term loan. Like, they know they're going to get paid off. There's times that these bridge loans, the smaller ones, the traditional ones, get paid off before even a payment is made. So like, there's got to be some money for the risk involved in there. So there's always upfront fees on bridge loans. Our bridge loan, we charge 2%, and that's just to cover the extra risk that we have and also, the cost of the loan, and we are paying off your current mortgage. Like there's just extra risk in there, so we have to recoup some of that money, to at least, at least come close to breaking even on the program. Like I said, our end goal is just trying to help our clients, our people, our referral partners, create a better experience for their transactions. But there are, it's about 2% on each program.
I don't think that's bad at all, Bjorn. And I think that if you look at it this way, I mean, how much, if you added another 12,000, at 6%, what is that per month?
Yeah, like every 10,000 that you borrow is about $55. So, it's a
I
it's a
mean,
$55. And like honestly, like all my NAF cash clients, and we close a lot of these, most of them would never get the house if they didn't use the program one way, shape, or, whether it's being non-contingent. So when you look at it that way, you got a family in a house that they wouldn't have gotten without the program. If that cost them $55 a month, and it's probably worth it, because otherwise they wouldn't have the house. So,
I don't think
um,
nobody's losing no sleep at night for
no,
$55.
no,
but
exactly.
but I do think that the convenience of having that is second to none. I think
Yep.
that's a big program. I think that's for families, especially if you have a few kids, and you got to figure out school districts, and you got to figure out it's hard to show houses when you got kids. You got to keep cleaning up the house because the kids are, doing their thing, as kids, and you got pets, and you got to keep, for every showing. This makes
Yep.
it so much easier to be able to get to that next house because you don't have to do all of those things. And so, just kind of talking a little bit more about some programs that your guys have. What about recasting? I know we touched on the NavCash and the bridge loans,
Yeah.
obviously with the competitive spring market ahead.
Yeah. So, recasting is a great program. This is, or option. It's not really a program. So recasting is basically, let's say you start off with a $400,000 mortgage, and then for some reason or another, you have another $50,000 you want to apply to it. So normally you'd pay your loan down to 350, but you're still going to have that $400,000 payment. We'll recast your payment to the new balance of 350,000 in your remaining term. So let's say you're 2 months into your loan, so you got 29 years and 10 months left. We'll run in your payment at 350, 29 years and 10 months, and adjust it. So you're not paying that $400,000 payment anymore. We'll also, like, if you pay down your loan below the 80% mark, will immediately eliminate your mortgage insurance. So we don't have a minimum amount of time you need to keep mortgage insurance. So we'll get rid of all of that. And this isn't a refinance. So you got your same rate. You're not paying all these closing costs. You were just recasting your payment for your new balance. I think I already mentioned it. We don't sell 99% of our loans. So it's nice that we can do this. You only need to pay $5,000 down on your balance to be able to recast. That's not going to, 5,000 is not going to make a huge impact, but that just shows you how much flexibility there is. And what I really like about this is, like, sometimes we talked about these bridge loans, you're not getting all of your equity out. So you may buy your house, sell your house, and then you may have 20, 30 grand that you got left over from equity that we didn't take out in the bridge loan after you sell. Well, you can apply it to your loan. You could keep it, like, it's up to you, but we can make it have an impact on your mortgage payment to get that final loan amount and payment that you wanted once all the dust settled with all the different transactions. So it's a great way. And what also I like is, like, sometimes I got clients, um, they might be buying a house. It might have nothing to do with a bridge loan or a cash program, but they're selling their house. They're getting a big check, and they're like, "Well, I want to do all this stuff to my new house. I can't figure out how much to put down." And I can advise them, like, just, put an amount that you're comfortable with, but leave enough that you're more than comfortable with, because you can always reapply it to your mortgage. Obviously, once you dump it into your property, it's harder to get out, but you can keep it with yourself, and decide what to do from there. So it's a great way to have flexibility in your payment, and maybe make some adjustments after kind of all the dust settles from all your transactions and improvements or whatever else you have to do.
So this is a quick question on that. Actually, I like that because it's not a lot of lenders that'd be willing to do that. Um, what about if the interest rates drop down? So obviously we're around like a 6%, hovering around somewhere in there. If it goes down to a 5.5 or 5%, and a couple of months later they say, hey, we want to see if we can recast our loan to a 5%. Is that possible?
Sorry, I got somebody knocking on my door. Yeah, that would be a refinance. So,
Okay.
yeah, and that would be, the nice part is if you're in our servicing portfolio, you get breaks on the fees and things like that. But if you want a lower rate, that has nothing to do with a recast. That's going to be a
Okay.
refinance. You're going to have to requalify things like that. The recast, we're not collecting W-2s, pay stubs. We're just adjusting your loan and giving you some paperwork to make those changes. But yeah, if
Okay.
rates are
So
down, if rates are lower, it'll make sense to look at a refinance comboed with that.
got you. Okay. I just wanted to make sure because I was thinking that if the recast does that too, but I think the recast does do, like, if I had a chunk of money to add on to, if I wanted to pay it down some more, I don't have to go and do a refi and start the loan from scratch. I can just
Right.
continue my existing loan and lower the actual balance down. It's kind of what I'm
Yep.
hearing.
Yep.
Okay. Yeah. Man, I mean, these are great options. Anything else you have to add?
No, I think that pretty much covers it. I don't know. You got anything else you want to talk through?
No, I think that just to do a little bit of a recap, we talked about the bridge loan, and obviously it's a lot of places that do bridge loans, but y'all guys have your own special program. A
Yep.
lot of other lenders probably don't have it in-house while y'all guys do.
Yep.
Y'all have a specialized bridge loan where y'all not factoring in the actual bridge loan payment because y'all are going to pay for the previous home while they only need to qualify for the new home. Stop me if I'm wrong.
No, you're
Um,
you're on a roll.
okay, so that kind of ties into like what we talked about before with the spring market approaching, and is obviously going to be a lot of buyer demand out there that's coming up, and we may not have enough supply, especially for certain type of homes in certain type of areas. This would really be a great program for those folks. And then we talked about the NAV cash program, whether you are selling the house or not. This will allow you to be a cash buyer and be able to buy your next home and basically buy your next home cash.
Yep.
And so that allows you to kind of move to the front of the line in the seller's eyes because sellers want to know how they can get their money right away. And they don't
Right.
want you to have any type of loans in place if they can help it. If all sellers can get cash offers, they'll probably take it about 90% of the time.
Right.
And so, and then we talked about the recasting where, if you did a loan with Bjorn at New American Funding, and you are, let's say if you did either one of those two programs, and you have some extra cash from the sale, from us listing the house, and you saying, hey, I want to add this to the loan and be able to drop my payment down a little bit more, the recasting is going to help with that. And if anything is above that, then we'll be looking at doing a refi.
You got it. You were
Perfect.
paying attention.
Yeah, I was doing a little homework over here while you was talking. But so folks, if you're still watching this video, kudos to you guys because I think this is a great program. I think that a lot of people are sleeping on this, and this is another avenue to be able to help you get exactly what you want. You don't have to settle for anything. If you are, just like I said, experiencing, you having kids and, a lot of things moving on in your personal life, and you need to be able to find another place, and you don't want to take some of the stress out of the move and be able to just get to the next house and then take your time selling the current house. Great program with the bridge loan. If you're trying to go 100% finance and 100% cash, sorry, with the NAV cash, great program. So with that being said, Mr. Bjorn, I think that we can conclude this, adjourn this. If you have anything else, I don't think you do you?
No, we're good.
Perfect. And so I'm gonna put all of our information in this on this chat. And if anybody have any questions, you can reach out to myself or Mr. Bjorn, and you can ask him those type of questions about this type of program. And if it makes sense, we would love to help you get across the finish line, get your family into a new place. Even if you don't have a family, get you to the next place. So there you have it, guys. Hopefully we'll see you on the next video, and then y'all can also comment on what kind of next videos y'all want to see as well. With that being said, thanks, Mr. Bjorn, for your time, and hopefully it makes sense for folks. And if I have any questions, we'll be reaching out.
All right. Thanks, Ed.
No problem. Take it easy.
Yep, you too.